Hey everyone, thanks for joining this video. In today's video, I'm going to go through all 24 stocks I've ever sold in my TFSA. Going to show you what my realized gain or loss was and how it's impacted my portfolio overall. On the summary screen right now, you can see in the top right hand corner, these 24 sells has totaled about $7,700 of capital gains over the last 7 or 8 years that I've actually been moving in and out of these stocks. In addition to that, as I showed in a prior video, I have about $18,000 of total dividends that I've also received over this time frame in my TFSA. And I have a few $1,000s of unrealized gains as well. But this video is really going to focus on the 24 stocks that I have moved on from. Now, some of these stocks I actually have rebought and I currently have in my portfolios. So don't be surprised to see some familiar names, but I'm just going to jump right into this. The first stock is actually the biggest gain I've ever had in my TFSA. You see on the screen here, it is Alphabet at about $7,000 of a gain. This is a huge gain for my TFSA. Total value of my TFSA is around $90,000 to $95,000. So this one sell alone is responsible for 7-8% of my entire TFSA. The reason I sold this stock here was it was just not a dividend stock, and I really wanted to focus my TFSA and RSP on dividend stocks that are giving me tax relief by holding them there. In addition to that, the FX rate in Canada versus the US was sitting at about 1.36, so I thought it was a good opportunity to cash in on that since I was holding this in a Canadian account, which I know isn't the smartest thing to do, but it's what I did. And I was just up a couple 100%, I believe, on this position. So I thought it was a good time to move on with Alphabet near all-time highs, or at least 52-week highs on the stock. Pulled the trigger and unlocked a lot of new capital for me to flow into dividend stocks for no taxes. Going into the second stock that I've ever sold in my TFSA, it is Artis REIT. So this was a REIT, one of the first ones I owned, probably back in 2017, 2018. I think they had some mostly office presence out west, like Manitoba, Alberta, places like that. And they were just a lot more focused on that area than I thought I needed. And I also had a lot of other retail REITs. I started buying RioCan pretty heavily and a couple other companies pretty heavily. So I thought that I didn't really need this REIT in my portfolio. I'm glad I actually sold this one. I never bought back into it. And I think the stock's actually gone down since then. So ended up being a pretty decent decision on Artis. You can see in addition to the slight capital gain, I got a $65. Also got some nice dividend income from this one. At that point in time, my portfolio was pretty small. So getting a couple $100 of dividend income from one of my stocks or one of my REITs was definitely not immaterial at the time. Going into my third stock, it is BlackBerry. So BlackBerry was actually the first stock I ever had in my TFSA, I think. It was either Rogers or BlackBerry. But this is one that I remember I had like $3,000, $4,000, $5,000 of BlackBerry when I first put in my first $6,000 or $10,000 in the account. And it was a acquisition rumor for, I believe it was Samsung or something like that, of buying BlackBerry. The stock price went up 20-30% overnight, and I just ended up selling it for $14 or $15 a share. Ultimately, that acquisition never went through. The stock price went back down, so it ended up being a good investment. But by the time that whole situation played out, I was already on to other stocks and dividend stocks, which I preferred. So I never ever got back into BlackBerry after this sell that got me a $1,300 gain. Next stock here is Boston Pizza Royalty. And between stocks, you'll see some companies that I've never sold that I still have in my portfolio, and just the dividends in the left-hand column over here associated with those stocks. But Boston Pizza Royalty, this was an early one too. You'll see kind of these dinky sells where I'm up 10, $20. I've gotten $20 of dividends. That was just me being more of an amateur investor and beginning investor, and getting just eager every time I had a gain of realizing it and locking it in. So that's probably for the most part what happened here. I got some months of dividend income, had a slight gain, decided to take my money and run on this one. Not really how I primarily operate now, but it's interesting to see how I was back then when I was a bit younger. Next stock here is Canadian apartment REITs, up $250 on capital gains. Also got some nice dividends. I remember I bought a small position in this one thinking I was going to average in to cap rate, and the stock just kept going up and up and up. I think I was probably up 20% or something on the year, and at that point I didn't really want to be averaging higher and higher, so I just sold out, took the $250 gain, got the $80 in dividend income. You can also see one of my biggest positions in my TFSA, CN Rail, with $1,650 of total dividend income in my TFSA, which is a notable amount, especially because that stock has a pretty low dividend yield on it, just a couple percent. So you can really see how it's accumulated over the years there. Going into the next one, Cominar. Cominar was another one of those REITs that I invested in very early on. They had a huge dividend. It was really attractive to me as a younger investor. I bid on it. Ended up not doing too bad on it just because of the dividend. Got about $1,000 in dividends. Ended up losing about $300. I remember after I sold it, this one actually went down more on the stock price. I think they cut their dividend a bit too. So got out at a good time, but was just a good lesson not to chase just the highest yielding companies just because they can always cut that dividend in half. They can take the dividend away, the capital appreciation, or you can start losing money on the stock price. So there's a lot of other factors, and you really just have to make sure that the fundamentals of the business make sense to be investing in. The next stock here, this is another one like Boston Pizza Royalty. I'm almost embarrassed to show it, but it's a stock I didn't even wait to get paid a dividend on, and I just took a $15 gain. Probably sold this a week after I bought it, got a little gain, took the $15 to the bank, and that's that. And this is one for those of you who follow some of my other videos. Diversified Royalty Corp is actually a stock I own right now in a couple of my other portfolios. Don't currently own it in my TFSA though. Dream Office REIT. I actually did pretty well on this one. This company, I believe, ended up getting acquired, so I sold it after the acquisition news came out. Made about $500 on capital appreciation. Was getting a monthly dividend from it too, so ended up doing pretty well on this one, given what my likely size of this was in my portfolio here. So happy story on that one. If I add them both together, up about $700 total. On to Enbridge. So I think this is the first stock here that I actually lost net total return on that I'm showing. Enbridge Income Holding Fund. This company, they were spun out by Enbridge, and I think they were supposed to be the more mature assets, the cash flowing assets that didn't have a lot of growth, and they just paid a big dividend yield. And then with interest rates, I believe going up at some point, or some fear of the economy and gas prices going down, all these assets like crashed a bit. I ultimately sold out of this and invested it in, I believe it was Fortis was the company I ended up moving this in. So a different, more stable, regulated utility company. And then about a year later, I think Enbridge actually bought this company back and brought these assets back in-house because they needed cash flow of their own. So if I held on to that, probably would have done a bit better with it. But ultimately, looks like I lost about $150 or $200 when I net out the dividends I got from the amount I lost on capital appreciation. Next stock here is Extendicare. So this was the only kind of old age home type company, for lack of a better term, that I've ever invested in. There's Chartwell, there's Sierra, there's a bunch of these other ones in Canada. But this one was the one that I dipped into a number of years ago. This isn't recent, but $230 in dividends I got, made $100 in capital appreciation. You got to remember on some of these stocks, like I had probably a couple $1,000 in them when my portfolio was like $20,000, $30,000 on TFSA. So when I made $300 on a position, it was like 15%. I felt like I killed it. And that's why you see lots of these ones that I kind of just took my money and ran when I got up to $300, $400, like on CapREIT there, like on Extendicare here. That was a really nice win for me back then when my portfolio was much smaller. First Capital Realty. So this one still managed to gain on $90 in dividend income on it. Got about $26 loss in my sell on the capital appreciation, or I guess depreciation in terms of the loss realized on sell price, but pretty good overall, I guess, generally speaking, up about 65 bucks on that position overall from the time that I held it. And then Fortis. So I currently own Fortis again in my TFSA portfolio. I'll actually link in the bio of this video. I went through all 13 stocks that I do own today in my TFSA. So I will share that video. You can watch that if you're interested to see what my current portfolio looks like. But Fortis is in there. You see here I made almost $500 in dividends, so it was a pretty decent sized position. And then I also made a couple $100 on capital appreciation too from selling at a gain in this account. So I ended up doing pretty well on this one. Next one is Hudson's Bay Company. Never paid a dividend. Held on to this one for a bit. I think I ended up selling this one when it was close to 30 bucks a share. And then it ended up going down to $7-8 a share about a year or 2 years later, and then getting taken private at $11 or $12. So I ended up doing very good with this one, all things considered, and got really lucky on my timing of getting out of Hudson's Bay Company. It's a company that today I'd never invest in. I think that was probably back in 2017, 2016, probably something like that. Maybe even earlier, maybe 2015. That I was invested in Hudson's Bay. It's just not a company that has, sequential growth, a great track record, pays a dividend. Just because they have a lot of revenue, they don't really have a lot of cash flow, lots of competition, lots of sector headwinds in department stores. So I definitely lucked out on being able to take a $300 gain on that one. And then the last one here, and here's the second stock that I actually ended up losing money in, is Liquor Stores NA. I believe this one got taken out at some point as well, but it was just a chain of liquor stores in Alberta and out west. Made about $100 in dividends, but lost 400 on the share price. So that is so far my biggest loss, even though I know it's going to get beat by something else. But lost $200 total on Enbridge, lost $300 total on Liquor Stores NA back in the day. The rest of them I gained money on the first page at least. If you like this kind of content, before jumping into the second page, be sure to give this video a big thumbs up. It really does help with the YouTube algorithm. Consider subscribing to the channel too if you haven't already. Okay, second page here, Magna International. So this is an automotive parts company, actually a really great business. They're still around. They've been doing pretty well, all things considered, over the last number of years. High free cash flows, buys back a lot of shares. Similar to some of my other dinky buys and sells to make $50, $100. Magna, same story. Didn't even hold on to it to get a dividend. Flipped it so quickly, up $50. Probably made 5, 6, 7% on a $1,000 position or $1,100 position and called it a day. Next is Manulife. So I actually got a big gain on this one, $100 in dividends, but got an $800 capital gain on it, which is great. Especially considered the size positions that I was dealing with. That was a big win. I remember that one was up like 20-30% for me, and I decided to cash it out. Next is Meta Platforms. This was actually one of my recent sells. It's the exact same narrative and prerogative as why I sold Google. Just wanted to free up this capital that's in my registered accounts in order to buy dividend stocks. So I alleviate myself from that tax payment at the end of each year. When I hold these growth stocks in other accounts, they're unrealized gains. So I'm not paying annual taxes on them, and I have no line of sight in really needing to sell any of these stocks. So I'd rather deal with this 20-30 years down the road in companies like Meta and Google and free up this space in these accounts for stocks I'm investing in now. So I got the opportunity on the huge run up in Meta to sell for a slight gain, that $55. I like the fact that I wasn't going to be on the run in it, so I decided to take the opportunity to liquidate. I believe the share price I ended up selling at was like $260. So soon after, it went up another 20-25%. Could have made really good money on this one in this account if I held it. But all things considered, it more than doubling in price. I thought it was just a good opportunity to get free of it in my TFSA. Next stock here, another nice big win for the TFSA. National Bank of Canada, $600 gain on capital appreciation. Also clocked in over $100 of dividends. So all in all, about $700 gain on that one. Next one is Northview Apartment REIT. This was like a cheaper alternative from a multiple perspective to Cap REIT. made 122 bucks in dividends, $326 in capital appreciation. I remember at the time, CapREIT was trading for over 20 times funds from operation. Northview Apartment REIT was trading closer to 15 times. They had lots more exposure up in like northern cities of Canada. They had some exposure to like Alberta, some to Ontario, but they also had lots in like the territories and stuff like that, if I recall. And those lower growth or just less familiar markets demanded a lower trading multiple, and that's why they were trading at around 14, 15 times, if I remember correctly, paying a pretty nice dividend for a residential REIT. Next stock here is Northwest Healthcare. I have not sold this one, and I've actually held it in this account for a long time. So I have over $1,600 in dividends that I've got paid out on Northwest. This one has come under a lot of trouble recently. I think I'm down 10 or 15%, but the amount I'm up in dividends on this one over the lifespan of the position, I'm definitely still up overall. It's just if the stock keeps going down, at some point it's going to offset lots of the gains, especially for the amount of time that I've been holding it. The next stock is a stock that I actually currently own in my TFSA again, but I sold it at one point, made about $100 in gains on it at one point, still getting monthly dividends from it to this day, almost at $2,000 in dividends there. So all in all, these two stocks here collectively have paid me almost $3,500 in dividends between Northwest Healthcare and Pizza Royalty. Next stock here is Pure Industrial. This one I actually bought a position in. I think it went down a bit, but I was going to hold on just to get some exposure to the industrial real estate space. And then it got completely taken out by another company, went up like 20% overnight. So got out of it before that acquisition went through, made $250, another $100 from dividends on this one. So nice to see so far on this page, all winners. Next one is, well, you see Restaurant Brands International currently holding it in this account, have gotten $150 of dividends, but that's about it. Then the one after that is my largest dividend gaining stock in this account, RioCan REIT. This one I've got over $3,000 in dividends from. I think I sold it once when I was in like 2015 or 2016. I've rebought it since. It's a nice big position for me now in my TFSA. So made that $60 that one time. Since then, have just been taking dividends on a monthly basis from this. And my whole portfolio on my TFSA, $92,000, $93,000. So RioCan's $3,000 in dividends over the years makes up for about 3.5%, 4% of my portfolio total, just from the dividends I've gotten from one stock, which is awesome to see that kind of compound and add up over the years in a tax-free basis. The next stock is Rogers Communication. So Rogers Communication have gotten about $550 in dividends from them, and I took a little loss when I sold the shares of around $71, but overall still did pretty well on that stock. And then going into the last stock, and this is the one that hurts the most, it is Sir Royalty Income Fund. I ended up selling this one during the pandemic. First of all, on the good side, I got almost $500 in dividends from this name. Sir Royalty owns trademarks like Jack Astor, Scatterbush, Chop, a number of other restaurant chains, Reds, I believe, Alice Fazoli's, across Canada, most notably Ontario. And they get royalties for every dollar that gets spent, similar to Pizza, the Keg Royalty Fund, all of those good ones. In terms of what happened here, this company, they have all sit-down restaurants. So during the pandemic, they just got destroyed. They started posting investor relations reports on there being serious doubt of bankruptcy or serious chance of bankruptcy, chances that so tons of stores were going to shut down. They were going to never really financially recover. So I decided to sell out of the name. I'm like, I'll take what I can still get with this thing until before it goes bankrupt. They cut the dividend entirely, and I took that capital, invested it in something that was going to pay me a bit of a dividend. All in all, the company's rebounded from like the $3 a share I sold it at all the way up to the high teens. So like a 500% gainer. I would have been up huge in it if I kept it, but it was just one that I wanted to get off my hands. I assumed it was either going to zero or staying down there and not going to be paying a dividend for a while. Obviously, in hindsight, my biggest mess up in this portfolio and my biggest regret in this portfolio. But overall, as I look up, this is the only one on this page that I've lost money on. And then on the other page, it was just the two that were a couple $100. So all in all, I think I've done pretty well in this portfolio of making sure the dividends I have coming in is offsetting potential losses from capital appreciation or depreciation. And in most cases, I've actually gotten appreciation as well as dividend income as well. So that's a great combination for compounding your TFSA over a long period of time. Going back to how I'm doing overall on my TFSA, excuse me for a minute as I get back to the first slide here. But I'd say I'm doing decent. I'm up, this is just, let me do a 3-year history, up about 9% a year, slightly below what the TSX has been doing as I look at just the recent performance. So nothing too terrible. I don't expect to crush the TSX with the stocks that I own. Lots of dividend stocks, lots of stable stocks. I think in years that the market's gone down, I've outperformed it. In years that the market's gone up, a good chunk I've underperformed just because my portfolio is a bit more conservative than the general TSX or the general S&P. But I'm comfortable with returns in the high single digits over the medium term. I think that'll still serve me well long term, and I really like managing my account myself rather than just putting it in an ETF, which is definitely a great option for most people. But for me, I like being able to have my hands on it, know the businesses I own in my accounts, and I think getting returns generally in line with the market for me is fine as long as I'm building my dividend income over time and I'm not trailing the market to a large degree. I'll continue with this kind of approach. So I hope you guys like this video. You can kind of see out of the $7,700 total, $7,000 alone came from Google there, and then the rest is give or take a wash over 7-8 years. But then I've gotten almost $20,000 in just dividend income in the meantime from all these stocks. So that's kind of the breakout of how my TFSA has been doing over the last number of years. The sells that I've done, there were 24 of those sells in total if you weren't counting. But let me know what you think about some of the stocks I've owned and sold in my TFSA over the years. I'd love to hear your opinions and know if you guys have ever owned any of these stocks and also sold them as well. But just wanted to thank you guys for watching. Be sure to give this video a big thumbs up. Subscribe to the channel if you haven't already, and I will see you guys in the next one.